Good morning, folks, and welcome to the Short VIX Show, otherwise known as the Short Vol Show, otherwise known as the Anti-Manipulation Show, and we are here on a Monday morning, bright and early, broadcasting to you live from the home of the Pilgrims, Cape Cod, Massachusetts, and I want to welcome you here as we are set up for a exciting expiration week for the VIX and a good time for the short vol trade. And once again, as I said last Monday and the Monday before, we are experiencing right now something known as weekend effect. And this happens a lot. And if you think about the difference between there being, in a 4-week month, you might have 4 times 5 trading days, 20 trading days. And some models are set up, based on trading days. Other models are set up based on just total number of days in the month. And this sort of causes tracking errors in the calculation of the VIX. And so what you notice is that on Fridays, it also is pronounced on another instrument called the VXST, which many of you will know is a short-term measure of volatility, whereas the VIX is about volatility 30 days out. The VXST is a much shorter term of about a week out. So they both have this sort of tracking error thing, whereas Fridays they seem sort of artificially low, and Mondays they seem sort of artificially high. So you often get a situation on a Monday morning where you have futures a little higher, and you also have the VIX a little higher. Now and that's not due to the fact that people are really nervous for some reason. It's due to this sort of tracking error thing. So it's very common. I mention it every Monday when we have a similar situation with futures up a little bit and the VIX up a little bit. Many people will comment in like a stock twits, oh wow, VIX up and futures up, something's going on. But yeah, something is going on. It's called weekend effect. So we see it again. This is the 3rd week in a row where we've had VIX up less than a point, but up a little bit with futures. Right now, E-mini futures are up 375 and VIX up 48 cents. So but that's not the most important and interesting thing about what's going on today, because today we have Contango in the futures getting really high as the front month future is forced to converge with the VIX with expiration only 2 days away. So let's take a look for a second at the numbers. And I will try to move my mug out of the way a little bit. There you go. So we do see VIX up 48 cents at trading 13.13, or not trading, but with a value of 13.13. Because remember, the VIX doesn't trade. It's a number that's based on a formula of a strip of SPX puts. Then the front month future trading 13.50. Down 17 cents, was down more earlier. Second month future 14.60, third month future 15.16. Now, as we do come into expiration, we're going to start to become more and more focused on that relationship between the second and third month future, as that will be the relationship which will determine the role after Tuesday. So let's go ahead and take a look at the VIX term structure really quickly here. And we'll go to VIX Central, which I like to use for that. And We do see Contango listed for the front month. Just to my left, you'll see on the screen where it says Contango percent. Where I'm putting the pointer right now, you see 8.38%. So that is the biggest amount of Contango we've had in quite some time. And remember, that represents, if it stays at 8% for a month, that represents the value of like a UVXY will be decayed by 8% per month. That's per month. So, times that by 12 to get how much the value is going to be decreased by for a year. And you've got about exactly 100%. So if Contango were to stay this way all year, this thing would be down 100%, which pretty significant. So that's what makes the excitement. That's what makes the headwinds that we don't want. You don't want to stay long these VIX ETPs with that kind of headwinds. What's happening every day, once again, is just that one over however many days in the month percent of the futures that are involved in this ETP are sold at 1348, the M1 future, and then they have to pay the higher price of the M2 future, which is currently 1465, to roll that future out. And that's a loss of value. When you sell something low and you buy something high, it's a loss of value. Now, when you actually do the transaction of rolling that future, however many they may be, roughly 1/30th of whatever the holdings are of the ETP, nothing is right. When you do that roll, you're not actually losing any value. Whatever the monetary value that you're selling is in total dollars, you're actually buying of the other future. However, the loss comes because you're selling something low and buying something high. And the distance, you're creating more distance for this future to fall. If you're short, that is going to translate to more dollars in the long run. So everything's sort of falling down towards that future there. So we have an exciting setup for you tomorrow. We'll be broadcasting a little bit later in the day, but we're going to have a little discussion on the expiration for the VIX. Now, couple interesting things have happened in the last couple months. One thing is, a couple months ago, there was a whistleblower he was an anonymous trader who was represented by attorneys, was sort of whistleblowing on the VIX manipulation, and we get this a lot. If you type into the search engine VIX manipulation, you'll see stories from all kinds of different months going way back. And the SIBO always denies it. Of course, they want to protect their brand, and it goes on and on. But the last expiration was particularly a particularly big move, where the VIX jumped 2 points in a half an hour right before expiration. And the official reason was that there was an order imbalance of 114,000 contracts. One particular contract, which I haven't found the actual trade. I should have been on it the day of, but maybe some of our guests tomorrow will have more specific information on the actual trade. But what they said was that an SPX put that was represented a 50% down move. Somebody bought a bunch of those with a month to go, and which is basically what they were trying to say was, like, if you're buying 50% out of the money puts in the SPX, that's almost a throwaway trade, because the likelihood of that ever happening is almost nil. So somebody was basically throwing away that amount of money that they spent on those. And so if we were to look right now, for example, at the May options that expire in 3 days, 50% of the money, so SPX 2727, so 50% of the money might be like SPX 1400 puts. So if I were just to look quickly, open interest for like the VIX 1400 puts in May is 17,000. So there's not like an open interest that sticks out a whole lot to me with specifically here, like some huge unusual activity for this particular expiration here. I would say, 50% of the money, I would say maybe the 1,400 puts, 17,000 traded. And then these are all basically no bid with 3 days to go. But if we do move out a few months to like June, you start getting a bid up at like 1,700, 1,800 puts. If we go out to September, for example, the 1,400 puts are 50 cents bid at 75. And most people would consider like if even the SEP 1,400 puts to be completely worthless, and to pay 75 cents for those would be kind of unusual. However, you have to remember that sometimes people are short these and they're covering them. If you're short a bunch of these puts and you're paying margin because of that risk, then it can be in your interest to cover them because you want to get out of paying that margin. You want to get that risk off your sheets. No matter how unlikely it is for a 50% move, it's still on your sheets. It still can be tying your hands for to be able to put on other trades that you want to trade. It's tying up money because you have to put up money to protect yourself when you're short puts, no matter how unlikely it is to happen that they would go through strike. So it could have been someone covering. But the suspicious thing is that it happened right before expiration. So what they're trying to say is that somebody was long VIX futures, and they figured that the amount of money they paid to pay up for these worthless puts, let's say they paid $200,000 to pay for these worthless puts, and the futures that they were long in the VIX were going to make them $2 million. Then it would be worth it to pay $200,000 to make $2 million. And that's the sort of manipulation that they're suggesting. There is no paper trail to it. Many people have surmised that like the SIBO could figure out which customer this was and actually find out from them. Try to find out from them what was going on, whether it's an opening or closing trade is pretty much public information. And figure out if they have, through the options clearing company, they could figure out if the same company has futures on. So the question is, if it looks like actual manipulation and something's wrong, then enough public outrage would put pressure on the SIBO to actually investigate it. I'm not sure if that's the road that my guests will go down. Or what's going to happen. But it will be interesting to hear them talk about it. Obviously, bringing someone from the SIBO on, there would just be denials. And, I, as a small media guy myself, I don't want to burn bridges, obviously, with the SIBO or with, access to these people that I like to interview. But at the same time, we want to get to the bottom of this. It is a cloud over the VIX and trading the VIX, and when you get these bizarre moves right on expiration, it's bad for business. It's bad public relations. We've had the VIX trade is full of bad public relations all the time. Just ask Seth Golden, who gets attacked for successfully making money even in the VIX. There's for some reason there's sort of a cloud over the VIX trade all the time, and I'm here to help dispel those clouds, clear it up, let people know that this is a legitimate trading vehicle. There is money to be made in it. There's nothing fishy going on, and to help clear up the clouds, we need to discuss these claims of manipulation. So we're going to do that a little bit more tomorrow. We will be broadcasting a little bit later, but I'm excited to have some guests on to talk about that. It's been requested a whole lot. Anywho, exciting Contango. Exciting to see the VIX below 13. We were talking about, wow, wouldn't it be amazing if it went below 14? It did go below 13, which is very exciting. With expiration upon us, having a VIX future, the actual M1 trading as low as it is right now, 1348. With expiration, we probably won't see what becomes the first month. It will be amazing if that future also gets below 14. We'll have to wait and see if that happens. We have had several days of VIX down, so I would look at some point for this to, kind of retrace, because markets just don't move straight in one direction forever. But if we do take a look at UVXY here, let's see, 180 days. So you can see it just sort of dropping off there. But this is exciting. All of a sudden, there's people, all over the VIX group and Facebook. There's renewed interest in the VIX, and everybody's getting excited. A lot of people who are trading the VIX were getting hammered for months, and I started this Facebook group kind of at a time when the VIX was out of favor, nobody was making money, but now everything's sort of coming back, and it's exciting as we come into the summer. The trees are in bloom, the grass is green here on Cape Cod, and the VIX short trade is rolling again, so it's very exciting. Anyways, thanks for checking me out on this broadcast today. Please consider supporting me on Patreon or otherwise, and we'll have a special broadcast tomorrow starting a little bit later in the day, but stay tuned for that. I always appreciate your support, and I will see you next time.